Welcome to Market Pulse with Act Research on FleetOwner.com. I'm Josh Fisher, an editor with FleetOwner, and I'm pleased to be with Act Research President and Senior Analyst Ken Vieth to talk about 2024 and look ahead to 2025. It's great to be with you, Kenny.
Thanks, Josh. Thanks for the invitation, and great to be with you. Look forward to the call.
Yeah, let's start off by looking backwards before we look forwards. As 2024 is coming to an end, what word or phrase would you use to describe these past 12 months?
I would say surprise to the upside, and to elaborate a little bit on that, I think what we saw in 2024 that we weren't thinking about so much in the second half of 2023 was private fleets continued. I won't say add capacity, maybe not with abandon, but certainly reasonably aggressively in a fundamentally weak freight market, and by our count, over the past 6 or 7 quarters, we think that private fleets have taken about 5 percentage points of market share from the for-hire fleets, over the course of 2024. So, definitely, one of those did not see that coming. It's different this time moments.
Do you feel like that is a change that's we're going to see continue, or will those private fleets pull back as things kind of return to some semblance of normal next year?
There is the question. What we look at is if you look at the National Private Truck Council's annual benchmarking survey, operating costs for private fleets are really quite expensive. There's extra empty miles, more expensive equipment, I think, and certainly more expensive drivers. So, what we've seen is kind of the spread between private fleet operating costs and for-hire spot and contract rates over the past couple of years kind of double from their kind of historical averages. So typically contract rates are about 50 for hire contract rates are about 50 cents per mile cheaper than private fleet operating costs, and spot rates are about 75 cents cheaper. In the NPTC's 2024 benchmarking report that covers 2023 data, those spreads had widened to $1 for contract and $1.50 for spot. With that background and getting back to your question, it's on one hand, I think private fleets, didn't like the situation they found. I should say companies generally didn't like the situation they found themselves in 2021 and early 2022, where they couldn't get transportation services when they wanted them to. And companies with private fleets, had the ability to do something about that, which was add capacity into their networks to kind of harden their operations. The challenge is if you think the kind of the perfect private fleet route is a distribution route where you go out with a full truck, you make your deliveries all day long, and you pick up internal backhauls as you're moving through the day. So you've got kind of a perfect circuit for your operations, and I think one of the things that's happened more over the past 6 quarters or so is kind of in hardening their operations, there's been more of a pickup of inbound freight. So, with inbound freight, there's not necessarily a backhaul to the vendor to whom you were picking up, from where you were picking up that load. So now the private fleet's definition goes from that, kind of perfect circle that I just described into a situation where now I'm either running empty miles all the way back to my head haul point of origin, excuse me, or I have to now get into the spot market and find a load on the way back, and that's kind of the situation. So I know I haven't answered your question, which is how long does this last, or does it still have legs? And we think. Just anecdotally, we think that the pendulum has swung about as far as it's going to swing towards private fleets taking market share. But what we don't know is how fast does that pendulum swing back.
Right. Or if those companies see that as the kind of new normal for them. And a lot of technology has come on the market over the past couple years too, as more fleets are using AI and those things to find those types of loads that can fit within their operations. It makes me wonder how private fleets might continue this and have this new share of that for hire market.
Yeah, no, I think you make a great point there. 10 years ago, we were saying, everybody knows where all the capacity is, on any given day. I think, we're at the point with technology where everybody pretty much knows where all capacity is, just about down to the minute at this point. So yeah, the technology has become highly sophisticated. I think that part of the answer for private fleets comes down to their willingness to embrace the liabilities of a for hire fleet. And you read about nuclear verdicts all the time, and am always shocked. And where do you want that liability? Do you want it closer to your balance sheet or farther away from your balance sheet?
Right, right. That's I think an age-old question that we probably won't even find an answer to next year, but we'll be continuing
Exactly.
to to look at that. Um, so let's talk about equipment. I saw your latest report in November showed that um, Class 8 truck orders, they continue to trend a little bit below year ago averages, but we have down the road this 2027 pre-buy that the industry has been very focused on, and those of us in the trucking media have certainly been very, very focused on. But after Donald Trump was elected in November, with a lot of anti-EV talk and anti-regulation talk in his campaign, it seems like fleets are kind of now wondering if they still need to worry about that 2027 pre-buy and those regulations. Um, I know you probably don't have a direct answer to this, but based on living through some past pre-buys and past EPA things and past administration changes, what's your take on things in over the next 2 years?
So we have seen Republican presidents in the past being handed repeal legislation from Congress that Republican presidents that I'm thinking of, George Bush, vetoed and said, clean air is important. I think, two or three things to think about, and I guess starting, I don't know.
Okay.
So we'll put that disclaimer on the table right now is we don't know. But what we think we know is what we do know is one. This regulation was initially promulgated under Donald Trump's first administration. So there's not a not invented here tag that gets assigned to this, like say the greenhouse gas 3 regulation that we're not talking about right now. Second, we're almost in the 5th year of a 7-year regulatory process. So I think most of the engine OEMs if they haven't already introduced an engine, will very quickly be introducing engines for sale in the market in 2025. So a lot of effort has been put in on the part of the industry. I think also, if it doesn't go through, we're looking at a bifurcated emissions regulation in the United States. So there's going to be the states CARB and the states that follow CARB, and then the states that follow EPA. So certainly headaches for truckers, headaches and more headaches for the industry. And then finally, I think one of the wild cards here is certainly Elon Musk has made his presence widely widely known around the Trump administration. And I would think at least based on some of his core businesses, it wouldn't surprise me that he wouldn't be inclined to support more expensive diesel engines that are more complex to operate. So we come down on the side, given kind of those factors, we come down on the side of that particular the clean truck low NOx regulation is likely to pass muster. Though, as a caveat, so the multi-handed economist here, the Congress back in May of June of 2023 actually sent legislation to President Biden, asking to overturn this regulation, and President Biden vetoed it. So there's already legislation that's written that some Republican congressman is probably going to dust off, and it's going to make its way back through Congress, and it's likely to end up on President Trump's desk at some point early in 2025, and that's where the coin is spinning in the air. Whether he vetoes it, whether it gets there in the first place because he doesn't want it there, and then if it does get there, whether he vetoes it. So yeah, interesting times, as we say.
Certainly is. And of course, you also have all of these OEMs who have invested, lots of money into developing and following these regulations that they've known about are around the bend, and it makes you wonder. Generally speaking, multi-billion-dollar corporations can't change their policies every 4 years based on who the U.S. president is. Do you think that maybe some sort of change would buy them and fleets a little bit more time to adjust to these more stringent regulations?
So yeah, that's I suppose is the question. Does the regulation go away? Does in solemnic fashion does the regulation get cut in half? Because I think there's two components to this NOx regulation. One is the technology to reduce the NOx, but the bigger part of the regulation is the warranty extension on the emission system. So could the solution be as easy as let's get rid of the warranty extension, and this isn't a $20,000 regulation, it's a $7,000 regulation.
Well, look, before I let you go too, I just would like to get a little bit more insight on the equipment that exists today and is available today and tomorrow. I know we have two major OEMs coming out with new model trucks. Now, Volvo has one this year. Freightliner will have one later next year. How do you anticipate those Class 8 orders going to start this year? Do you see them still continuing to be below, that year-over-year average like we've seen this fall, or are people waiting for things to pick up in 2025?
So right now, the variable that I think provides the absolute strongest correlation to Class 8 tractor production is carrier profitability. And we take the big publicly traded truckload carriers, we aggregate their financial results, and that they are our canary in the coal mine. And If I go back to the second quarter, this group of household name carriers, if you will, had their lowest net profit margins since the first quarter of 2010 in the second quarter of 2024. So, basically generational lows. In the third quarter, they got the dead cat bounce in the third quarter, but still only to about 3.7% net profit margins. And to put that into context, if I go to the first quarter of 2022, the net profit margins for this group were north of 9%. So when we think about pre-buying and kind of demand in 25, one of the things and actually demand in 2024, and why the question is to why your forecast was wrong in 2024 is because we were focused on carriers making money, for hire carriers making money, not recognizing that private fleets were going to come in and add a bunch of capacity into an overcapacitized market. So looking into 2025, we still believe that there's 2 or 3% overcapacity in the tractor market today. So we don't think that carrier ability at this point in the tractor market makes the case for pre-buying in 2025. And the hope is that kind of pause for the cause in tractor demand in the first half will allow that supply-demand balance in a still growing economy to right itself, allowing carrier profitability to rise through the first half of the year, setting the stage for pre-buying in 2026. Where we are seeing, I believe, pre-buying is in the Class 8 vocational space. If we look at especially construction-related end markets, the Biden administration in 21 and 2022 put about $2 trillion of stimulus. So the IRA, CHIPS, the Inflation and Jobs Act, and those bills right now are still only about 40% committed. So there are long stimulative tailwinds in that vocational truck space. So where we have seen considerable strength is in vocational truck orders, kind of 2025 order cycle to date.
Before I let you go, what's something else that you're keeping an eye on in 2025?
So the big thing for us, our forecast is kind of for benign 2 to 2.5% GDP growth, kind of as far as the eye can see. We really like the U.S. economic setup. Consumers have very deep pockets right now. Corporate profits are if not at record levels, at very high levels. So the economy has very good momentum, coming into 2025. Some of our concerns as we look at the year is the policies that could be implemented, by the Trump administration as they take the reins of power, specifically tariffs. If we go back to 2018, and we're not debating the merits of the tariffs, but if we go back to 2018, through the first half of 2018. A lot of tariffs, were put into place, and by the middle of 2019, the U.S. industrial economy, the agricultural sector were really suffering, because if we put tariffs on people, they put tariffs on us. So there's the risk of inflation and kind of risk of damage to manufacturing and agriculture as we move through 2025. So that's something we're paying close attention to, because if you put in tariffs and you drive inflation higher, then the Fed doesn't cut interest rates. Maybe they raise interest rates, and then instead of looking at a kind of a continuation of current trends into 2026, are we looking at more of a downturn in 2026? And that's one of the things that we really are wrestling with as we're trying to figure out what's going to happen in 2025.
So it sounds like there's still a lot of open-ended questions without answers going into next year.
Yeah, I keep calling Donald Trump and he doesn't answer. So
Maybe try Elon.
yeah, there you go.
Well, Ken, it's great to talk with you. It sounds like we already have a lot to talk about in January as we continue this series. I wish you a Merry Christmas and a Happy New Year, and to you and all your great colleagues out there in Columbus.
Thanks, Josh. Appreciate it. And Merry Christmas to you and your colleagues as well.
Thank you, sir. Take care.